The narrative went from never sell to buy more than you sell, which is fine, but it's a narrative shift, because the buy more than you sell, it depends on the duration. Is that buy more than you sell every week, every month? If it's buy more than you sell every 5 years, then Strategy could sell 800,000 Bitcoin this year and still have bought more than they sold over the last 5 years. But I don't think people would be super happy if they dumped 800,000 Bitcoin. To be clear, they have to. They don't have a choice. They owe the money. So you have to pay the money. It is what it is.
For years, one of the strongest narratives in Bitcoin was simple: Michael Saylor's strategy would never sell. That belief became so deeply embedded in the market that many investors treated Strategy's Bitcoin treasury as effectively removed from circulation forever. But over the past few weeks, something changed. Strategy sold Bitcoin for the first time in years. And while the amount was tiny, just 32 Bitcoin, the reaction was anything but. Because the market wasn't focused on the size of the sale, it was focused on what the sale might represent. The concern isn't that Strategy suddenly turned bearish on Bitcoin, far from it. The concern is that the company has evolved from a relatively simple Bitcoin accumulation vehicle into a much more complex financial structure with multiple stakeholders: preferred shareholders, debt holders, common shareholders, and Bitcoin investors, all expecting different things. As Strategy introduced higher yield preferred products and accumulated new obligations, some investors began asking an uncomfortable question: if cash needs continue to grow and Bitcoin enters a prolonged period of weakness, who ultimately bears the cost? That is why the recent sale has generated so much attention. Some market participants believe it was simply a routine transaction. Others see it as a deliberate attempt to prepare investors for a new reality, one where the narrative shifts from never sell to buy more than you sell. That's a subtle difference, but it carries enormous implications. Because if Strategy's future depends on balancing multiple obligations while continuing to accumulate Bitcoin, then understanding how this machine works has suddenly become one of the most important conversations in the entire crypto market. Before we dive into Jack Mallers' breakdown of what's happening behind the scenes, make sure to hit the like button, subscribe to the channel, and let us know in the comments: do you think the market is overreacting to the sale of 32 Bitcoin? Or is this the beginning of a much bigger shift in the Strategy story? Now let's hear Mallers explain why this debate has become so important. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time.
So anyways, what happened over the last few weeks? So if you are casually just like living your life, you're going to the gym, you've got a family, you're eating farm-raised food, and you're not paying attention to any of this, and all of a sudden, Strategy is all over the news, you're like, what actually happened? Here's my interpretation of what happened. Earlier this year, Strategy, I think it was this year, right? 2026? Had to have been. Strategy raised a US dollar reserve. They raised a $2 billion US dollar reserve by selling $2 billion of newly printed MSTR shares. My interpretation that they raised this cash to basically show the market, hey, Bitcoin isn't doing so hot, so you must be asking how we're going to come up with all this money. Well, here's $2 billion worth of cash, which should give us a little bit of runway in case the market bleeds sideways. You guys won't have to panic, because basically the market is like, holy shit, they have to come up with all this cash. Are they going to be sacrificing me? Like the preferred holders are saying, are they going to suspend the dividends? The MSTR holders are saying, are they going to dilute and inflate away the stock? The Bitcoiners are saying, oh my God, are they going to dump a bunch of Bitcoin on our heads? Right? And so everyone's asking, like, who are they going to sacrifice to come up with the cash? And they raised the cash at the time and said, this should put everyone at ease. We have enough cash. Okay. Now, at the time, I think it was 2 years. Then it became 18 months because they issued more stretch, which again, the more successful stretches, the higher the burden becomes on how much cash they need. But the point was everyone can breathe a sigh of relief. Now, this was like at the time, this was painful for MSTR shareholders because they got diluted, but it was helpful for Stretch because it put everyone's mind at ease. But again, I keep highlighting this because there's a tug of war going on. Like every time it's beneficial for one group, it's detrimental to the other group. And unless Bitcoin is in a raging bull market, it's unclear to the market. I think what the market is trying to figure out right now is how the entire capital structure can be happy at the same time. So we go on. What happened over the last few weeks is MicroStrategy spent that cash reserve. So they actually paid off a 2029 convertible debt early at 92 cents on the dollar. And the market freaked out because they went from having enough runway for the market not to have to freak out about how they're going to come up with the cash anytime soon to needing to come up with cash soon. And everyone was like, why did you pay off a debt instrument that converted by 2029? Like that's so far out. Meanwhile, you owe all this cash and you don't make any money. And so now we all have to start panicking and figuring out who you're going to burden to come up with the money. Which again, it depends on who you are. And if you think this is a good strategy or bad strategy, I'm just more reporting. But that is when obviously the market started to freak out a bit. And then there was obviously, if you look at the prediction markets of is Saylor going to sell Bitcoin, started to spike because again, you have to come up with the cash. Before the preferreds, you didn't have to come up with the cash. Now that you have these preferreds, which might be the most genius invention in human history. I personally don't think so. Obviously, I could do this strategy at my company if I wanted to. I don't. So I'm personally not a fan, but I'm not saying, Saylor has defied like all the haters before. Who knows if he will again? It's totally possible. But when you introduce this to your capital structure, you owe a lot of money forever. And so now the market starts to freak out and say, how are you going to come up with the money? Are you going to just tell all of the stretch holders like, sorry, this thing's going to sit in the low 90s for a while. Like it's not a money market. And then they start dumping it. MSTR shareholders start to get nervous. Like, oh man, what if he starts issuing a ton and diluting the stock, even though it's not above NAV? Again, the actual NAV is not 1.0. I'll explain that later. And then the Bitcoin holders start to freak out and the Bitcoin market starts to freak out because it's like, okay, this guy owes a ton of money forever and he seemingly can't pay it without selling something. What if it's the Bitcoin? Then you've got Iran, then you've got these IPOs and Bitcoin starts to sell off. So that's kind of what happened. So they use the word inoculate, which I found weird. It's an interesting word. Look up the meaning. I thought it was interesting. I mean, I don't know if it was on purpose or not. But they sold 32, which is obviously a meaningless. Who cares about that? That's a tiny number in the grand scheme of things. But the point was to warm the market up and to start to change the narrative. The narrative went from never sell to buy more than you sell, which is fine, but it's a narrative shift because the buy more than you sell, it depends on the duration. Is that buy more than you sell every week, every month? If it's buy more than you sell every 5 years, then Strategy could sell 800,000 Bitcoin this year and still have bought more than they sold over the last 5 years. But I don't think people would be super happy if they dumped 800,000 Bitcoin. So it's the narrative. They did this to start to change the narrative a little bit, which again is fine. To be clear, they have to. They don't have a choice. They owe the money. So you have to pay the money. It is what it is. And yeah, obviously, if they end up with millions of Bitcoin and they only sold thousands of Bitcoin, that I would consider that an awesome trade. But the question is, sure, buy more than you sell. Over what duration, though? Like, are there specifics to that guidance, or is it just general and the market needs to interpret their meaning on their own?
What makes Maller's analysis interesting is that he's not arguing strategy is doomed, nor is he claiming Michael Saylor has suddenly abandoned his Bitcoin-first philosophy. Instead, he's trying to explain why so many different groups within Strategy's capital structure are now pulling in different directions. The company raised billions in cash reserves to reassure the market that it could meet future obligations without creating panic. But when a large portion of that reserve was used to retire debt years ahead of schedule, investors immediately began asking new questions about where future liquidity would come from. According to Mallers, that's what triggered the recent anxiety surrounding Strategy. Preferred holders want confidence that dividends will continue to be paid. Common shareholders worry about dilution. Bitcoin investors worry about additional sales. And as Bitcoin experienced volatility alongside broader market uncertainty, concerns about how all of these interests could be satisfied simultaneously began to grow. The result was a debate that quickly expanded far beyond the sale of 32 Bitcoin itself. The next part of Maller's breakdown focuses on how Strategy responded to those concerns, why the company immediately returned to buying Bitcoin, and what that decision reveals about the ongoing balancing act between Bitcoin accumulation, shareholder dilution, and maintaining confidence across the entire capital structure.
And then today, they announced that they did two things. One, they bought 1550 Bitcoin for a little over $100 million. And then they also increased their dollar reserve by $100 million to $1 billion. And if you look on the right, you can see they did this entirely by issuing new stock, by selling common stock, raising the cash, and performing what Saylor announced on the left. Now, I will say, usually Saylor announces, and again, we're friends. It's not anything I wouldn't say to his face. Usually he announces the BTC yield metric or the BTC per share. It was a little convenient he left it out on this one because this was dilutive. So the only reason I'm saying this is because it goes back to the initial point, which is, why did he do this? He did this for two reasons. One, he wants to show people he can still buy Bitcoin and he can buy more than he sells. It's a signal to the market of telling everyone, shut up. You guys shut the f up. He added $100 million to the dollar reserve because he's trying to tell the market, I know why you're scared. You're scared because you don't think I can come up with the money. I can come up with the money. Now, how did he come up with the money? MSTR shareholders paid the price. So Stretch got a boost of confidence today because they added to their dollar reserve. Bitcoin got a boost of confidence because Saylor is buying more than he's selling. Who lost? MSTR shareholders lost. So again, you have these four classes of people. You have Bitcoin, debt, preferreds, and common equity. And the question is, with such a complex capital structure, can everybody win? Especially in a Bitcoin bear market? Because obviously, there's one thing that can solve Strategy's problems right this second. If Bitcoin rips to 200,000. And you see people online saying, Saylor must be acting this way because he knows something that we don't. And maybe he does. I have no idea. He definitely knows. He's been in rooms that I've never been in. There's no doubt about that. So maybe he does. But people are saying that because they're trying to rationalize how the company is building their balance sheet and building their capital structure. Because if you're not confident Bitcoin's going to go up to new all-time highs like relatively soon, then you're going to have this overhang of a problem of every single week, you're going to owe money, a lot of money, and someone in the capital structure is going to have to pay the price to fulfill the obligation, obviously. And that's kind of, does that make sense? That's kind of the lay of the land. And there's a bull case and a bear case. The bull case is Bitcoin's going to rip soon. Who cares? I mean, there are MSTR shareholders that don't mind paying the price. I don't know why. I don't know the logic there. Again, I don't own MSTR. I mean, this is one of the reasons I don't want to carry this brunt, but people do, and that's fine. And now obviously the bear case is why would you own MSTR? It has a lot of obligations to fulfill, and it seems like it is the vehicle to raise the cash. Now, there are people out there that are saying, why would you own Bitcoin? If this company needs to raise so much money, then they might sell the Bitcoin. Now, I'm not worried about that. That's why my DCAs are on. I've survived many bear whales, as they say, many large sellers. Doesn't matter. Why would I own Bitcoin because someone has to sell? Stupid question for me. And then there are other people saying, why would you own any of these preferreds? Clearly, they're not scalable. They're going to fail at some point, and you're going to be caught holding the bag. And so it depends on who you ask and who you talk to. There are MSTR bulls. There are bears of the certain parts of the capital structure. I would say the best and safest place to be right now is owning the debt, because you get paid out first. It's really no way you can lose, but I don't know. It doesn't really yield you much. Zero coupon, and you're converting at a premium. So they're way out of the money. So I don't know. Anyway, that's when people say what's going on. Why are people talking about strategy? Why is the Bitcoin market nervous about strategy? Why is the MSTR price reacting to what they're doing? Why is Stretch trading down?
The most important takeaway from this discussion is that the debate surrounding strategy is no longer just about Bitcoin. It's about the interaction between Bitcoin and an increasingly sophisticated financial structure built on top of it. As Mallers repeatedly emphasizes, there are now multiple groups whose interests don't always align. Actions that benefit one group can create pressure on another. That's not necessarily a fatal flaw, but it does make the situation more complicated than many investors realize. At the same time, it's important to recognize that none of this automatically means strategy's approach will fail. In fact, the bullish case remains remarkably straightforward. If Bitcoin continues climbing toward new highs over the coming months and years, many of these concerns could fade into the background. Higher Bitcoin prices would strengthen the balance sheet, improve investor confidence, and make the company's obligations far easier to manage. This is one reason why many long-term strategy supporters remain completely unfazed by the recent controversy. The bearish case, however, is equally easy to understand. If Bitcoin spends an extended period moving sideways or declining, the questions Mallers raised become much more important. The market will continue asking where future cash comes from, how ongoing obligations are funded, whether additional dilution becomes necessary, and whether future Bitcoin sales become more likely. Those questions don't prove that a crisis is coming, but they do explain why investors are paying much closer attention than they were a year ago. Ultimately, Mallers' message is less about predicting disaster and more about understanding risk. Strategy may very well continue proving critics wrong, just as it has many times before. But as the company grows larger and its capital structure becomes more complex, investors can no longer rely on simple narratives alone. The challenge now is determining whether all parts of the machine can continue working together if Bitcoin's next major move takes longer than expected. If you enjoyed this analysis, make sure to like the video, subscribe to the channel. Thanks for watching, and we'll see you in the next video.